We handle all of the complexities of crypto, ultimately just give fiat out at the back end to the merchant or to the payments company. And this simplifies their journey in crypto completely.
Where are some of the more stablecoin-centric places in the world so that we can kind of use those as a shining example?
Similarly, I assume how we want this flow to work for WalletConnect Pay is either, as you guys have in a QR or a tap with a crypto card. Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX-USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome back to Stabled Up, our weekly premier stablecoin show brought to you by our friends at Frax, powered by FRX-USD, FraxNet, and more, a leading stablecoin provider in the crypto economy for the last 5+ years. Today, we have Jess Houlgrave. We are going to be talking about stablecoin payments at scale. WalletConnect Pay has been a big news in the neo-finance sector from last week. Crypto payments are scaling, massive crypto card volumes. Revolut and neobanks are issuing wallets to the mass market. Traditional banks are enabling retail stablecoins, and WalletConnect Pay is going to be offering cashback style rewards and more. Jess, we'll get into all of it, but first of all, how are you? Big week.
It has been a big week, one that we've been working towards for a long time. I feel like I've been working towards it for a long time. I've been thinking about crypto and payments for many years now, and so very excited by it all.
Great. Awesome. Yeah, WalletConnect's been in the stablecoin space, in the multi-sig kind of wallet signing space, in the wallet and kind of user interfacing space, but it really feels like this is like a very one-sided jump into where you believe the future is headed, which is payments for stablecoins at scale. And I think yesterday, actually, or the day before, Santiago Santos put out an article about why he thinks B2B stablecoin payments are going to absolutely explode. So let's just kind of start with some of the thesis here of the product, and then we'll get into some more of the actual specs and details. Why are you so bold up on B2B stablecoin payments? Why is this going to happen? Why is this going to work? Talk to us about why this specific niche is set to grow big time this year and into the end of the decade.
I think we see people moving on-chain in all the various form factors and across all of their business lines right now. So businesses are moving on-chain and managing their treasury on-chain. As a result, people are going to be wanting to pay their suppliers, pay their employees with assets that live on-chain. We saw the zero-hash Gusto announcement for contractor payouts. People are going to want to get paid in stablecoins. And with WalletConnect Pay, really what we're doing is building on top of our existing network and our infrastructure, which accesses about 700 different wallets, many thousands of applications already built on the network, and makes a really seamless payments flow for consumers so that when they go in-store with an Ingenico partnership or with any of our other payments companies online, they're going to be able to pay for goods and services with those assets that they now hold.
The Ingenico partnership, I think, is one that caught a lot of people off guard and was a wow moment for the whole industry. This is something that I know I go into restaurants and shops, and I see this as the point of sale provider. And so to associate that with WalletConnect was a big eye opener. Give us a deeper sense of how it works underneath the hood. I tap my normal card. What is the process for businesses to onboard WalletConnect Pay? Do we kind of get all the Ingenico ones by default? Are you going to be going to businesses and kind of picking them off? Tell us a little bit about the ins and outs of this product.
Instead of a traditional crypto experience where you're asked to connect your wallet and then sign a transaction, you're taken through what feels and looks like a payments experience. So do you want to pay with this asset? Yes. Click pay, one and done. You don't need to think about anything else. And you can pay with whatever asset is in your wallet. On the other side, We unfortunately, it's not tomorrow on all Ingenico devices, but it will be a gradual rollout with both their direct merchant partners and, of course, also with their acquiring bank partners and payments companies. So they cover about 40 million terminals worldwide today. And we will hopefully one day be in all Ingenico terminals. But right now, a merchant either needs to opt in directly with Ingenico or ask their PSP. And we hope that a lot more payments companies, we've got several in the pipeline, but we hope that a lot more payments companies are going to switch this on in the coming years, because we do see demand from merchants because they want to be able to offer this to their end users. Gives them lower fees, faster settlement times, often higher basket value, higher transaction value for end users. So tons of reasons why the merchants want it, and why those PSPs should consider enabling it.
You've argued that with regards to the payments, for actual consumers to be interested in using some of these payments, right? Cashback style rewards is interesting, and I'd like to get into that. But when it comes to the B2B payments landscape, when you're explaining what you guys have built to other enterprises and businesses, is it as easy as saying faster settlement times, cheaper fees, instant payments, more profits for your business, less money paid to a credit card provider, less fees paid to a Stripe? Or like, what is that conversation like as far as understanding and educating about stablecoin based flows using WalletConnect Pay?
So for most merchants, I think it's very unlikely today that any merchant is going to say, right, I'm only going to accept crypto. That means that this needs to sit alongside their existing payment methods. And for a lot of merchants today, they will accept card, they will accept cash if it's in store. If they're online and e-commerce, then they probably accept other things like Klarna as a buy now, pay later method. They might accept other account to account based payment methods like open banking in the UK or Trezor or anything else. So already in existence are hundreds of different payment methods, and very few of them are global, mostly just the card networks, and the alternative payment methods tend to be more localized. But really, WalletConnect Pay sits alongside all of those other payment methods. And that means that when we're talking to a payments company about enabling this, we've got to speak their language. They actually shouldn't need to understand how crypto works underneath the hood. We should just be able to deliver the benefits of this as a payment method to them and to their merchant. So we plug into their existing systems. We give them the reconciliation data that they need in the format that they need it. We handle all of the complexities of crypto, ultimately just give fiat out at the back end to the merchant or to the payments company. And this simplifies their journey in crypto completely. So really our goal here is to put it in language that they understand, which, as you said, is this is cheaper, it's faster, it gives you these additional benefits, it's global, and you can launch it really easily with WalletConnect Pay.
And do you see a world where this evolves to, and I guess right, I'll give us a before and after, right? We've got fiat coming out when it hits the merchants, but when it comes to the consumers that are coming at the point of sale, are we expecting them to come with stable coins? Or do you think, we can bring fiat to the point of sale to, a regular consumer? It looks like they're just using fiat. Are we going to end up integrating stable coins in this middle part to improve settlement times, improve settlement costs? So it looks like, fiat in, fiat out, kind of move the money with stable coins in the middle. Do you think that's one of the end states that we ultimately get to?
I mean, I think the ultimate end state is like all pieces of the economy sit on chain. So people are paid in stable coins, and we're seeing that growing a lot today. So they're getting paid in stable coins. They want to pay for things with stable coins. And then those companies are paying their employees and buying from their suppliers and paying all their bills in stable coins. Ultimately, everything should sit on chain over the long run. Now, today, typically we see most people who want to pay for stuff with crypto or with stablecoins already have those stablecoins. People aren't going through the painful on-ramping process just to make a transaction. They typically already have that. So that number of people is growing. And I think actually, if you look at it the other way around, today many merchants want to take fiat out at the back end. They don't have the right setup to be able to accept these payments directly in stablecoin, but they are moving almost from a separate thought process. They're moving their on-chain or their treasury management on-chain anyway. And so you can kind of close the loop in a way. And eventually we may remove that fiat off-ramp kind of component, and the payment goes all the way end to end in stable coins. So I think really the long-term game should be that we don't need any of those traditional rails. Obviously, that's a nice dream to have, and will be a long time away. But I do think that a very meaningful proportion of payments, B2B payments, consumer payments, salary payments, payouts, how people are managing treasury is going to shift on-chain over the coming years.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
It's a study done recently by, I'm looking at it now, McKinsey and Artemis. So, two data providers in this consulting firm that said, granted, the stablecoin industry right now is upwards of $380 billion. Most of that is currently in B2B transactions. That accounts for $226 billion. Remittances is $90 billion. Capital markets is $8 billion. True stablecoin payments represent just 0.02% of the global $2 quadrillion payments market. And so I think you guys are currently sitting at where the bulk of the stablecoin activity is happening in the B2B payments category. But as we look at payments as a whole, that whole category of payments, where do you see the puck moving next in terms of how we're going to? Because we agree with you. We think 100% of the $2 quadrillion payments market will be on chain. But how do we get to 100%? Right now, we're only at 0.02. Is it more growth in B2B? Do we ultimately get more remittances, or is it more retail? How do you think the stablecoin market at large starts to cannibalize and supersede more and more of the global payments market?
Look, I think all of these things are very symbiotic. And I think really you need all of the pieces in place to make it make sense. Does it make sense to receive all of your salary in stablecoin if you have to off-ramp it all? Yeah, maybe for some people, but probably not for many. Whereas once you can actually pay for everything, then it might make more sense. Similarly, if you're a business, does it make sense to move your treasury on chain if then you have to off-ramp again to pay your suppliers? Probably not. But if you combine the treasury and the supply chain payments together, might make more sense. So actually you need a lot of this stuff to come together to make it make sense for people. The other thing you need is the right incentives and for people to have the right motivations to do this. And that means giving them great user experience so that this isn't worse than what they have today. And I think until now, crypto payments are arguably a lot worse than a tap to pay card experience. So that's one of the things that we are really, really focused on, is making that user experience great. And then you need to think about who is incentivized to do what. And that's where some of the, it's really experimental at this stage, but that's where some of the cashback experiments that we're running, these kind of rewards or interchange type rewards that we're giving to our wallet partners and to other people as part of that flow, hopefully create enough incentives to make people change, because we all know that consumer behavior can be really sticky. And so we need the right motivations. Merchants offering you a discount if you pay in crypto to kind of change that behavior, for example. Lots of things that we can do there to try and experiment with that. But that's definitely going to be one of the, challenges for crypto payments over the coming years. Is how do you take what people are used to and make them use something different?
And to your point, incentives are a great way to do that. Could you give us a sense of the incentives that are out there now? And tell us, how are businesses and users able to take part in these incentives?
Yeah, so what we've just announced for like the launch of WalletConnect Pay is that for the initial period, end users paying with WalletConnect Pay in store or online will get 2% cash back. And then we've got some other cool promotions, I think, coming up with a few merchants who are going to offer additional discounts. We've got a few asset like stablecoin issuers, for example, who want to offer additional incentives for using their specific stablecoin. So I think we're going to see that incentive pool and the types of incentives that we can offer grow over the next little while. How do people get involved? I think if they want to become a direct merchant, then they should reach out to us. We have a few partners that we're doing that with. We're getting great feedback from them. It's a great learning experience. So if people really want to get started ASAP and their existing payment provider can't give them crypto payments, then they should get in touch with us. But I encourage merchants to speak to their payments providers, tell them that they're interested. A lot of payments providers are interested in this, but they want to know that there's demand from their merchants. And so, have those conversations with your payments partners.
Yeah, I mean, this article about what's stopping you from receiving stablecoins is particularly interesting, as well as it pertains to the incentives here, because I think there's still just this big education gap, as well as just a convenience gap, right? So let's talk about what actually happens when someone goes through an Ingenico physical kind of like toast machine and taps to pay, right? You tap to pay, your credit cards come up, you just click one, Face ID, scan, done. Similarly, I assume how we want this flow to work for WalletConnect Pay is either, as you guys have in a QR or a tap with a crypto card. When it comes to actually using the crypto that I have on a mobile app on my phone, how is that going to work from point of sale perspective, right? So what is going to stop me from being able to actually spend my stable coins that I have in a WalletConnect app, in a MetaMask, in a Phantom, et cetera, or if I have like an 𝗵𝗶𝗃 card or a crypto.com card on my tap to pay, what's going to stop me from actually being able to do that in the real world as this actually rolls out? Is there a specific requirement from the user side that I need to have in order to be able to spend my stablecoins?
So I think there's a really important distinction between spending stablecoins on a like stablecoin native or a crypto native payment kind of method. It's what we see in the market today as stablecoin cards. If somebody's got a stablecoin card today, that's usually a Visa or a MasterCard. And what happens as part of that flow is that the moment that you tap your stablecoin card, those stablecoins leave the on-chain world. They go straight back into the old world, and the rest of the payment flow is completed on those old Visa or MasterCard rails. It means that the merchant doesn't get any of the benefits, doesn't get cheaper payments, doesn't get faster settlement time. They're basically just a Visa transaction or a MasterCard transaction that are pretty indistinguishable for the merchant from any other card transaction. So those stablecoin cards are great for end users because people want to pay with crypto, but they don't bring much benefit to the rest of the ecosystem. And they certainly don't keep assets on chain. Now, what we're trying to do with WalletConnect Pay is keep those assets on chain for as long as possible, make sure that the end-to-end payment flow can take place on chain. That means that when you scan your QR code with your wallet, and you mentioned MetaMask, there are hundreds of others that this is compatible with. When you scan that QR code with your wallet, the money is actually moving on chain. It's not being off-ramped at the point that you tap it. For some merchants, it's going to be off-ramped, but eventually we can just take that piece out and people can be settled end-to-end on-chain. For you as a user, it looks like you scan the QR code and then you're asked to basically pay. It's a one-click experience. I think over time, we're hopeful that we can also translate that to NFC experiences. So it's much more of a tap rather than a QR code scan. Although in some parts of the world, the QR code is a very familiar form factor for payments, if you go to Southeast Asia or somewhere. But we want to make this feel as close to a like Web 2 payments experience as possible, so that everyone feels comfortable making those payments.
YEET is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
Hibachi is fast and private perps trading, secured by ZK with 𝗯𝗲𝗃 underneath. Go to hibachi.xyz to start trading today.
Yeah, I mean, I think that the QR code in the Western world is a bit less accepted than the tap. I think generally people want the easiest flow, and I'm not sure. Like, basically, what you're getting at here is that you want to make it so that the stablecoins stay on chain and the money stays in the on chain environment throughout the entire sales process into the end of the sale, rather than having to do the off ramp or on ramp process. And so would that then require the business that's accepting the stablecoins to also be willing to hold stablecoins in some sort of like wallet or account, or like if I'm a business and then I get paid in stablecoins through WalletConnect Pay, I have to pay my employees, my property taxes, my rent. Aren't I just going to want to then off ramp that as well and pay that? Or is the idea then, I guess in the future to be able to also pay your expenses with that same stablecoins that you just received?
Yeah, so today we absolutely enable merchants to receive fiat out at the back end. To your point, not all of them have wallets and not all equipped to do that. And so we manage the entire payment process on chain. And then at the last mile, we do a conversion to fiat to settle to those merchants. Now, obviously, the end state is that we don't need that. And as more and more merchants also have the treasury management piece and everything else set up, eventually we can just take that out and kind of join the dots at either end, so that the payments go in stable coins and go out to merchants in stable coins. We'll already see merchants, or some businesses anyway, wanting to pay their employees. So again, it's about us moving as much of this on chain as possible. And over time, I think we'll be able to remove some of those fiat components. But for now, it's really important that a merchant, if they want to, can take fiat.
What would you say is one of the biggest gaps or obstacles still today to completing this value chain on chain? Like, what are some of the things that you know are still yet to be accomplished here that we're focused on going forward?
Look, I think there is a lot, not all of it within the WalletConnect domain. We're really focused on those like payments experiences. But I think, for example, true like payroll for employees still has some work to do when it comes to things like taxes and reporting. A lot of like government tax forms just aren't equipped to understand when somebody's paid out in crypto. Works quite well for contractors, but less so for employees oftentimes. So some of that, I think a lot of existing like accounting tools, accounting setups, accounting methodologies, even in top parts of the world, need updating. It's very recently that we've got real clarity on like what is a stablecoin, what counts as a stablecoin in the US. That definition is still evolving in other parts of the world. So for a business to kind of truly be on chain and not even need a bank account, so that they can pay all their suppliers, pay all their rent, pay their employees, etc., and then be able to accept all money in crypto, pay their taxes in crypto. We're quite a long way away from that.
Right.
But I think what we will see is these two worlds kind of slowly intertwining. Today, maybe like 1% is taking place on chain. Maybe tomorrow that's 5%, and maybe in 10 years' time that's more like 95%. But that fiat world and the existing setup that we have has to work hand in hand with the on-chain world. We see that more and more, and so it's important that these two things are seen as being able to work together.
Yeah, I see it very, very similarly to the way that we're thinking about legacy finance, where we believe that banks everywhere are going to be forced to innovate. They're going to be forced to pay higher yield eventually, whether it's a result of regulation or a result of them just getting innovated by some of these neo banks. And as a result, they're forced to sort of, change and adapt their ways. Similarly to what you're saying, it seems like as an industry, the way to think of this is, look, if we can front load a lot of stablecoin users in the front part of that value chain, these people, they want to pay at point of sale with stablecoins, it'll slowly start to force merchants and eventually, the merchants at a higher level, like the municipalities, the tax collectors, the property taxes, all of these things, and the payroll as well, as you mentioned, will be forced to accept stablecoins and be more stablecoin centric if we front load the first half of that marketplace because more people are using them. And so I'm curious if you're thinking about it the right that same way, and if so, what are some examples of jurisdictions that are doing a great job of this now? You mentioned Southeast Asia as a form factor, but where are some of the more stablecoin centric places in the world so that we can kind of use those as a shining example?
So I think we're seeing two types of jurisdictions almost where stablecoins are kind of growing very fast. One is actually where like the existing financial system is not doing so well and people want to they want to move into stablecoins sooner. So somewhere where people actually want to reduce their exposure to the local currency and want to hold their assets in a dollar-denominated currency, for example, there's a real pull there from the ecosystem to have stablecoins because that's what people really, really want. So we see that in Latin America and a few other countries around the world. On the other hand, we also see jurisdictions where actually at the government level, they're very pro stablecoins, pro crypto, and want to see this happen. The US obviously has made big moves there in recent years. But also, the EU put out some announcements today, not crypto or even payment specific, but talking about like EU tech to move away from like the dependence on some big US companies. So I think there we will start to see, EU native payment rails, account to account payments or crypto payments start to be something that people become more interested in. Similarly, there are some other like very forward thinking places around the world where crypto really has to be like legal tender, like El Salvador and other places. So it comes both top down and bottom up, I think, in terms of different places around the world driving forward that adoption.
Yeah. Yeah. I mean, last thing from my end, Jess, with regards to the adoption side, and globally at Davos last week, Jeremy Allaire, the CEO of Circle, really had a big headline hit with regards to how he sees agentic payments happening with stablecoins over the next 5 years. Really just, this is going to be a massive use case for stablecoin payments. I think of like micro payments on the internet. I think of using, subscription-based payments, all these different types of stablecoin flows in an agentic sense. How are you building WalletConnect Pay, and just generally, how are you thinking about your strategy as the agentic kind of payments flows start to trickle in over this year, next year? I imagine next year we probably see some agent to agent payments happening. How do you think about this from a business strategy perspective and from a product perspective?
Yeah, look, I mean, WalletConnect has always been this network that allows wallets to communicate with apps, and you can translate that pretty directly, which is that agents will probably have wallets that want to communicate with apps. And so I think a lot of this is very aligned with how we've always seen the world. It's just that instead of you and the wallet, it will be your agent that is controlling the wallet. Obviously, we need to make those messaging types compatible, but everything that we do is sort of in line with that, in line with things like the X402 standards and others. And really, we have a great history at WalletConnect of creating standards that are open source. We write a lot of the chain agnostic standards. We've written several Ethereum improvement proposal standards, and we create a lot of our own standards for how our wallets and apps should interact with each other on an open source basis. And I think that there's some great work being done and obviously lots more to do, but that it's really rooted in creating these standards that it's going to make it easy for people to build on systems.
Yeah, makes a lot of sense. Jess, just give us some closing thoughts here and tell us where WalletConnect is headed after this. You guys have this flagship partnership and are doing tremendous work. Any key milestones as far as direct merchants or how much volume you'd like to see go through WalletConnect Pay throughout 2026?
We had just over $400 billion of transactions taking place. So for the network, I would love for us to build on that this year. We're ahead of plan, I think, although we're only halfway through January. So I think the network level will continue to see that growth. For WalletConnect Pay, it's very hard to know because this is still such a nascent industry. But I think if you look at people's willingness to pay with crypto, with these crypto cards, albeit, those numbers have gone up significantly. And so that demonstrates to me that people want to be able to pay with crypto. I think we'll have our first merchants with the Ingenico partnership coming online, hopefully at the end of this month or early next month. So we'll start to see that. We've already got a few merchants direct with us live. There's a great coffee shop in Lisbon that people can go and use the new WalletConnect Pay experience with. And of course, we've got all the existing partnerships we have with other payments companies where you can use that more traditional WalletConnect flow, but still execute a payments experience. So, for me, 2026 is about bringing more people a great payments experience and more merchants who want to accept crypto, whether that's with us or generally. I think that's the direction that we're all pushing towards so that we can keep more things on chain.
Yeah.
Feel a
Jess
market brewing $1 trillion.
Quadrillions. Thank you for your time. Congrats on the WalletConnect Pay announcement. Looking forward to the moves in 2026. It's funny how we've came from payments being such a big part of the foundational infrastructure of blockchain back in 2017, 2018, when Robbie and I joined, almost like forgot about it all as if it was too boring for the last 6 to 8 years. And then now we're back. And it's like, okay, we're going to get back to the most important things that we can do, guys, on chain at scale. So Jess, again, thanks for coming on and congratulations.
Thanks so much for having me.